Most beginners in Forex trading rely solely on chart patterns and heavy leverage, thinking they've found a shortcut to riches. But what if I told you that strategy often leads to failure? Today, I'll share how I trade differently, using economic fundamentals and controlled leverage to make informed and sustainable trading decisions. Many novice traders dive headfirst into currency trading with two major flaws in their strategy. They rely only on chart analysis, ignoring the bigger economic picture. They overuse leverage, often 20x or even 50x, turning small losses into devastating blows. These mistakes turn Forex trading into gambling rather than an investment. My approach is different. Instead of chasing patterns on a screen, I analyze the fundamental health of each currency using 10 critical economic factors, such as unemployment rate, interest rates, inflation, GDP growth, political stability. I score each factor for both currencies and let the data guide my decisions. For example, if the US scores 8 points and the UK scores 2, I focus my trades on the stronger dollar. This method ensures I'm making calculated moves based on real-world data. Another mistake beginners make is using excessive leverage. Let's take a closer look at how leverage affects your trading. Sure, 50x leverage can amplify your gains, but it also amplifies your losses. It's like driving 200 miles an hour without brakes. High leverage can wipe out your entire account in seconds, leaving you with nothing. I stick to controlled leverage, usually 4x to 5x. This approach allows for a balance between potential gains and manageable risks. It's about finding that sweet spot where you can grow your account steadily. This allows me to manage risks while still capitalizing on opportunities. Remember, in trading, survival is the first step to success. Let's take a real example. Trading the USD against the GBP. I recently analyzed 10 factors, including inflation, GDP, and unemployment, and scored the US 8-2 against the UK. Based on this, I focused on a long position for the dollar. However, I monitor these scores regularly. If they shift, say to 7, 3, or 6, 4, I reconsider my position and adjust accordingly. This flexibility is key to long-term success. Now, I'm not saying chart analysis is useless. It has its place in timing entries and exits. But relying on charts alone is like trying to drive with a map that only shows half the roads. By combining fundamental analysis with controlled leverage, you can build a strategy that's data-driven, logical, and sustainable. If you're tired of losing trades and want to trade with confidence, start incorporating fundamentals into your strategy. Leave a comment below with your favorite economic indicators or questions about my scoring method. And don't forget to subscribe for more insights into disciplined Forex trading.